Hello and good evening, everyone. Today's webinar topic is debunking the myths on personal finance. Time to get the facts right. So, for this, we have with us Mr. Kalpesh Azhar sir, a certified financial planner and SEBI registered investment advisor with over 19 years of experience in personal finance and investment advisory. Kalpesh sir is the founder of Full Circle Financial Planners and Advisors based in South Mumbai and works on a fee-based model with clients in India and abroad. Sir is a regular expert on TV channels like CNBC, TV18, ET Now, and Z Business, and also writes on financial planning in leading media platforms. Sir is the author of the book Yours Financially, Life, Finance and Films, published by TV18 Private Limited, and is known for its efforts in spreading financial awareness through corporate and educational sessions. Now, a short glimpse about NISM. NISM is a public trust established in 2006 by the SEBI, the regulator of the securities markets in India. The institute carries out a wide range of capacity building activities at various levels aimed at enhancing the quality standards in securities markets. So before beginning the session, I would like to request all the participants to note some important points. First, that is question will be taken at the end during the Q&A segment. Second, all participants will receive a participation certificate within 3 to 4 working days. Third, the recording of this session will be available on NISM's YouTube channel. Now, without any further delay, I request Sir to begin with the session.
Thank you, Sahil, for the lovely introduction, and very good afternoon to all the participants and all the aspirants who are, I would respect them, and I always appreciate people who are always seeking investor education, because even I personally believe that I myself am a student and I'm learning new things every day in the field of finance. So, without wasting much time, friends, the topic which I very close to my heart and I like talking about it is personal finance. But fortunately or unfortunately, there are lots of myths uh, the people have, and it's my job as having spent some time in the field of personal finance to clear those myths, and that's exactly the session today, that we are going to debunk the myths on personal finance, and I'll try to make it as easy, as simple, and also try to make it entertaining, because I believe that finance, when we talk about finance, it can be a little boring, because we keep on repeating the things which are necessary, but it has to be presented in a different way. So I'll try my level best to put it in a different way, and I hope you really enjoy it, and more importantly, learn out of it. So, friends, let's start the session. Debunking the myths on personal finance. Time to get the facts right. So, first, let's understand, before we go into the myths, that what do we understand by the concept of personal financial planning? Because this is a topic which is often misconstrued, and many people still keep asking questions. There's confusion. So, first, let's get the fact right of the simple, sheer definition of personal financial planning. So, it is a process of wisely managing your finances today to achieve your goals in future, while helping you negotiate the financial barriers that inevitably arise in every stage of life. So if you see here, friends, that the words which are highlighted in the blue tinge are wisely managing, achieve your goals, and negotiate financial barriers. And this applies to one and all. And the process which is there is so simple, it's uncomplicated, that everybody who is, I think, using common sense in his day to day life, if he understands personal financial planning, I think he will never go wrong, or anybody cannot take him for granted or take him for a ride in the world of finance today. And he will surely achieve his goals and sleep well at night, now and in the future. So, this is the definition of personal financial planning. Keep this in mind, friends, and I think you will enjoy this presentation more and more. Now, when we say financial planning, it's just not talking in thin air. there's a certain technique, there's a certain roadmap, there's a certain, I would say, logic which has been taught to us as first as students, and now we try to impart it to all the people whom we talk about financial planning. So, what are the pillars of financial planning? What is this roadmap? What is this platform which we are talking about? So, first and foremost is all all of us have in our day-to-day life is our income and our expenses. And in financial planning, we monitor it to a personal cash flow. And this is, I would say, जैसे आप डॉक्टर के पास जाते हो and doctor first catches your nerve. The cash flow is the nerve center of your personal financial planning, because that is where we understand that whether an individual or a family is on the right path. They are living a very balanced life where their income and expenses both are in sync. Things can go wrong, but this is the starting point. So, cash flow, which is measuring your income versus expenses. Then we go to understanding your net worth, which is first analyzing, first calculating all your assets which you have. And mind you, in financial planning, when we do personal financial planning, friends, do not mix your professional or your business, assets with it, or aspirations or liabilities or whatever other terms. This is what you as an individual along with your family are planning. So this is your net worth estimation, where all your assets and are calculated, and you have to deduct the existing as on date liabilities. So what do you owe to an institution, to an individual, to a credit card? So that is asset minus liabilities gives you the net worth estimation. Then, of course, risk management, very important integral part, which is the insurance advisory. And in that, people have again lots of notions, lots of misconceptions, and people do not, take the right product. And our job is to have a person cover his financial losses first through his life, where his dependents are there, and second, covering his assets, and most importantly, in today's times, health insurance. So, insurance advisory is the next pillar. And the fourth one is estate planning, which is nothing but transferring your existing assets and your aspirations and everything which you fulfilled or wish to transfer it to the next generation is to be done in a proper way. So there are many, I would say, robust ways to do it, and that is done through proper estate planning to your next generation. But friends, you see, in the between, beach mein gap hai. And that is the heart of financial planning, which is investment linked goal planning. So, if you are a financial planner, you will be talking about goals, goals, and goals. You will not be talking about returns and market and all. We'll cover all those things. So, how do you have your investments which are tagged or linked to attain and achieve each of your goals? So, this is the pillars of financial planning, and which is the best suitable method to help you achieve your goals is what a financial planner does. Now, the topic. So, if this is the crux, we have set the platform, we have set the ball rolling. That what is financial planning and how does it go about? There are many myths, and we have to declutter the myths and actually arrive at a fact. So I'll take you through this lovely journey, and I encounter this day in day out, friends. And it's sometimes, I would say, funny, it's sometimes disheartening, it's sometimes hilarious, but most importantly, you learn every time about what people are perceiving or thinking, and why they do not take up this fantastic process of financial planning. So, myths versus facts. Now, the myths, and I'll cover it in such a way, friends, that it will flow through. Okay. So, I've divided this in myths about financial planning, and the second part of the presentation will be on the investment terms. So, all this is interlinked. You and I, as people who follow capital markets, who follow the financial jargons, who follow the economy के news में सुनते हैं कि आज क्या हो गया, ये क्या हो गया, वो क्या हो गया, will relate to it. Okay. Now, first about the cash flow. This is I said about the financial planning myths. So people ask that in the cash flow, which I said is the nerve center. People ask why should we maintain day-to-day expenses? अरे यार कौन करता है ये सब? The process is tedious. The point here is that in our own homes, many of you will correlate to this instance which I'm saying. We've seen our mothers, our grandmothers, have a small diary which they keep writing every day at the end of the day, in the night, with a small light on, writing about the daily expenses which they've incurred, about vegetable, laundry, and whatnot. So what are they doing? They're actually giving a hisab of what amount they have, and they jot down the expenses. Now that, I think I would say, the rustic way of managing expenses in a cash flow, we have not learned. But that is the most important part, that how do we do it in a more detailed manner, in a more technical manner, in a more practical manner. It is not tedious, boss, because you have to have an account of how much is your income. Now, for salaried people, income is not a problem because they have a fixed salary coming at the end of the month or a year. But for people who are professionals, who are salaried, who are having a business, their incomes may vary. So you at least need to have a handle of how much you're earning, approximate, and how much are your expenses. So this cash flow, which is there, makes you and your family write down every expense, right from grocery to your household help, to your utilities, to your insurance premiums, to your lifestyle, how much you spend on restaurants and movies, and how much you spend for children's education, how much you spend on traveling, vacations, everything. Now, what happens is many of us, most of us, I would say, do not do this exercise. And when in financial planning, a person does this exercise, he finds it is an eye-opening exercise. His myths are cleared. That he understands that if I have written 100 rupees, say for example, is my monthly income, and when I put pen to paper and I find out that honestly, when I'm writing it down, my expenses are coming to 120. अरे बॉस कैसे हो सकता है यार? But life carries on for him. He's moving on with a smile. How can you have 120 of expense against 100 of income? Which means there is a leakage in the ship somewhere. Now, where to plug that? What are the extra expenses? What can be cut down? Is an exercise altogether. Now, that instance where you are earning 100 and spending 120 is a negative cash flow. Okay, you will soon be in a very, very problematic situation if a person has a negative cash flow. Okay, what is a positive cash flow? Same example, you're earning 100 rupees, you are writing all your expenses very honestly, and you find out that you're just spending 40 rupees. Good for you, you're spending less. But the question to be asked is, you're saving 60 rupees, and you're just saving 60 rupees. You're not utilizing it to invest it. You're not making your money work for you. अरे investment तो आप कर ही लोगे, लेकिन even you're not enhancing a lifestyle for your family in a measured way. So that, if you find out, is a positive cash flow. But again, your money needs to work for you. You need to invest. There's a difference between saving and investing. Okay, as I always say, that saving is an emotion. You feel good about what you save. But investing is an action. It is a measured art. Okay. Now, net worth. What are the myths surrounding net worth? Okay, when you write down all your assets, you have assets of various kinds. You have fixed deposits, you have corporate bonds, you have mutual funds, you have stocks, you have real estate. I'll come to real estate in a little bit of a detail later on. Now, all those are your assets, and you say, oh, that is my net worth. Okay, I'm worth 1 crore rupees. Arey, boss, against that, at a point of time, if you have borrowed money, now either in the form of a loan, what is that outstanding loan as on date जब आप हिसाब मिलाते हो? So, for example, you have taken a loan of 50 lakh, and as on today, when a question is asked on to you that how much of that loan is still pending, you say 25 lakh. Plus, you have a credit card outstanding of say 1 lakh rupees. Now, all that your loan and your credit card, 25 and 126 lakh rupees, has to be first taken as a liability. And from your assets, which is there, 1 crore minus 26, 74 lakh is your net worth as on today. You cannot flaunt yourself and say, my net worth is 1 crore. No. पहले भाई गांव को भी पैसा चुकाना है. You understand? So that is how net worth is calculated. And it's a very important parameter to understand because we get to know where has a person invested in, has it been in the right instruments, has it been just lying idle or not growing. So that gives a complete handle of the assets. The point which I said about real estate, it happens every time. I'm just quoting this because we are talking about myths. So say for example, when you come to fixed deposit, you place an amount, mutual funds, you place an amount. When you come to real estate, people say that I stay in a house, my house worth is today 2 crore, and where I am staying in Bombay, and all my other assets are which are FD and everything is another 50 lakh rupees. So my net worth should be, and I don't have any liabilities, so my net worth should be 2.5 cr. So the fact is, this is a myth that in financial planning, when you are tagging all your assets to help you achieve your goals, you cannot have the resident house in which you are staying as your asset, because you are not going to sell that house to achieve a goal. Okay. In fact, I would term it, and many financial planners do it. In fact, it's a liability because every month, every day you are spending on that house. Okay. So something is going out of your pocket. Now, you cannot talk about appreciation and all that things because you're not going to sell it in the first place. So this is a myth. So for me, that person's net worth is only 50 lakh, and the house in which he's staying is not an asset but a residing house. Very, very interesting part. Insurance advisory. Okay. And you all are people who follow the capital markets, and many people might not like what I'm about to say, but everybody knows the fact in the heart of hearts that insurance is very, very highly missold, and people are underinsured, and more importantly, they are paying high premiums for it. But what is the myth in it? The myth is that when insurance is bought, okay, the first question they ask is that after I pay the premium, do I get anything back? And they say that if I'm not going to get anything back, then why should I be paying the premium? So they take every policy. Now, this is first I'm making it clear. I'm talking about life insurance here. Okay. And they will always say that, I want a policy which at the end of a certain time period gives me something back. Now, what you are doing inadvertently is you are asking the insurance company to invest your money. You want a guaranteed return, and you are ready to pay a higher premium for a sum assured or a sum insured, which is not quite commensurating what your actual requirement is. So if you see that most of the policies which are sold are the endowment policies, the ULIPs earlier, and all these things, which always a money back policy or a whole life policy, which always have that element of giving the money back to the person. Now, if you put a financial calculator in place and endowment plans and everything, all the people who've done these calculations know heart of hearts that these returns are even not inflation beating those. And more importantly, what bites is that the sum insured is not at all adequate. And the real product, the I would say the hero of insurance, which is the term plan, is always put on the back burner because the same questions arise in a term plan that they don't get anything back in a term plan at the end of the policy period, but they throughout the policy period they have been paying a very minimum amount of premium for a maximum cover. And I think at the end of the policy period, they should thank God that they are alive. And that's what insurance is all about in life insurance. So that is a myth. People need to clear it. And, the second point which I'm saying is it's again very funny. I've encountered it with many people. And this is more pertaining to obviously taking a life insurance policy, but more important for a health insurance policy. My future is intact. I will always remain healthy, wealthy, safe. And believe it or not, it might sound bizarre, but people also say that "Arey maut ki baat mat karo." Now, this is really hurting. Okay, they are not ready to face the reality of life, and they go in a very, I would say, la la land, and they are wiped out when a health, claim comes, a hospitalization comes. So, this type of mindset is really hurting to a family. As in, when it happens, God forbid, it should happen to any family. Now, as I mentioned, the heart of financial planning. Okay, we say financial goals. क्या होते हैं financial goals? Okay, so myths of financial goals. So let's start with this thing. I wish I can retire peacefully with a corpus of 5 crore. I want to buy a luxury car worth 25 lakh to 50 lakh rupees in the next, you know, few years. I want to send my children for higher education. Now, this as just wishes and wants. What have I just said here is I have not put any numbers to my wishes or my wants. These are simple aspirations. These are simple इच्छा. In Hindi जो बोलते हैं, कामना. These are just thoughts. Now, these are only true to the extent of you dreaming of something. You haven't actually fructified it or put anything into action, boss. Okay. So, in fact, should be that how should you be setting your goals and how should you be going about it when you say goal planning, because that's what your money should be letting you do, is nothing but it should be written. Okay. The most important part, your goal should be written. They should be time bound. They should be realistic. I'll explain each of these three. They should be action oriented and they should be positively intended. Okay. So what I mean to say written means I'll explain a loose goal, a loose aspiration versus a clear goal. I wish to retire with a healthy sum in the next few years. Okay. And you just spoken it. First, you need to write that goal down. You need to have a time bound to it. I wish to retire in the next 10 years. It should be realistic in the sense, yes, you wish to retire. And with what number are you talking? I wish to retire in the next 10 years with a corpus of 5 crore rupees. And for that, I am starting to invest in my EPF, my mutual funds, and my stocks. And it should be positively intended that this will keep me independent and I will be self-sufficient in my life. Now this is a complete goal which is more realistic and specific. Okay. And even positively intended, I'm just going by a little bit of spirituality here, friends, that you cannot have a goal which is I would say uh, illegal or hurting somebody, and it's very I would say immoral as well. So it should be with a good कर्म, जो हिंदी में बोलते हैं कर्म अच्छा होना चाहिए उसका आपके लिए और दूसरों के लिए. Now, exactly what I mentioned, a goal is just a wishful thought till you start investing for it. Now, you cannot just say these are goals. You need to have action for it. That's the action-oriented, path to take for it. And you will have to understand a fact that when you talk about something in the future, it has to be uh, coming with a problem because there will be inflation. And that is the biggest hurdle to your future goals. So these are the facts. You cannot just be living in a la la land and say कि आज मैं 1 करोड़ कर रहा हूँ तो 5 साल के बाद मेरे को 1 करोड़ ही चाहिए. It will grow, okay, because inflation will hit in the next 5 years. So that 1 crore might be, say, ideally it could add up to 1.5 crore. Who knows? Okay. Now coming to the behavioral myths. Now this is something very different, and this is encountered by all of us. Okay, day in day out. The first question people ask is market का क्या लगता है? You would have heard that time and again this type of a word you would have heard. We face it as professionals, and for anything like we are financial planners and we really don't delve into equity markets directly through stocks, but as soon as you have created an image, people say market का क्या लगता है? And as if you are some astrologer or some jyotish, as if you know, I think this is the one thing which you need to bounce to people, that बॉस मार्केट का मुझे कुछ नहीं लगता है, मुझे अपने आप मैं जो प्लानिंग करता हूँ मुझे उसका लगता है. Now, many people would come and say that as soon as they tell them that please invest in the markets, please do your financial planning, please take the right path to finance, and you start talking certain numbers, the simplest way to people to move out is they say that this sounds risky and confusing. Now, when you say risky and confusing is because you do not or they do not know the actual facts. Once the facts are put on to them, the risk is completely taken away of unawareness. The biggest risk is not knowing. The third one is people living in always a future tense. वक्त सब ठीक कर देगा, अच्छे दिन आने वाले हैं. Why do all this right now? Okay, they just keep on procrastinating, they keep on thinking, and they just don't take any action. This is one thing which has caught up of late, and as a financial planner, it's all around us. Okay, and when you tell somebody that I'm an advisor, I'm a planner, or I'm here to help you and I know the things well, the first thing they say is, who is he to tell me how to manage my finances and lifestyle? Okay, the ego which is there in people. So you see this, everyone today wants to be a DIY Baba, a do-it-yourself Baba. And they think that whatever they are doing is just absolutely 100 on 100, and they can never go wrong. Because they feel that if they are an expert as an, in their own profession or in their own job, even finance is just chutki baja ke, they will attain freedom in it. If somebody is doing it, why can't I? And what are the problems they face? First, I can manage my own money. I don't need anybody to tell me about it. Wrong. The one which is now catching fancy, I have robo advisors. Okay. Now, this robo advisors are the ones who are AI generated, or the people who give preset answers. They are the bots which are operational. You give them the data, and across the screen within 5-10 minutes, like a 2-minute noodle, they churn out your financial plan. It's not, really, really handy. They do not have the complete data for it, but it is a big field which has caught up fancy of many people. I, being a human advisor, would always tell people that a human creates a robo and not the other way around. So this is the notion which people have. Oh, the great one. I watch YouTube, and all the fancied gurus and all the fancied, courses are being offered, and people come up with all different types of, I would say, jugaad to tell people how you should be managing your money. And the most important one, on which earlier it started as a lightly lete hain, now there's been a heavy crackdown on them. People are losing money because of influencers. I would call them misinfluencers. So all the influencers who are not, experienced or not registered or not certified, and who just take up a camera and start shooting themselves on YouTube and calling them financial experts, I think just are there to create doom and gloom in the life of many people. So be aware of them and stay away from them. Continuing with the myths here, very important aspects. These I want you to be careful, because some slide which is coming up could be a real learning for all of your friends. Okay, many people, when you tell them about the retirement planning thing, they will say, I will think about it when I'm 40 plus. I'm still 25, 30 year. अभी क्या सोचना रिटायरमेंट के बारे में यार, चलता है क्या जल्दी है. ओके, कैजुअल, आराम से, कल क्या होगा किसको पता, अभी जिंदगी का ले लो मजा. नहीं होता है बॉस. ओके, This is a myth, and I'll show you why. Exactly. आज के लिए जियो, कल की कल सोचेंगे. Second, I've already invested enough. I know it all. Again, the DIY thing. Again, living in a fallacy, living in a bubble. So let me tell you why this is wrong. That why procrastinating or thinking about putting off things at a later stage. Okay, this is a small arithmetic table, and all the financial planning people or students will completely relate with it. It's taught to us, and we are just sharing what we are taught so people understand. So, suppose you need a corpus of rupees 5 crore at your age of 60, okay, when you are retiring, and you require 5 crore. Now, let's see what happens. So, how much do you need to save for the same if you start saving per month? Okay, the simple, I'm not saying SIP, but just a saving, and that saving should be growing at a rate of approximately 12%. That's the calculation. 12% CAGR annually Varshik. Now, if one individual starts investing at the age of 30 for this particular goal of having to get 5 crore at the age of 60, so he's got a clean 30 years to invest. So 30 years into 12 months is 360 months of investment. He has to invest an amount of 14,165 per month. Okay. And that at the age of 30, hypothetically, if people have a salary of 75 to 80 lakh or 75,000 to 1 lakh rupees per month, sorry, easily they can, shell out 14,165 per month. Now, what happens? Now, another individual says, that person who says, after I'm 40, I'll start saving and investing. How much would he have to put in the next 20 years, now 240 months, to attain that goal of 5 crore? You see what's happened? The amount has increased by almost 3.5 times because of a 10 years delay in between. Now the amount becomes 50,000 per month, 50,042. And there's a third person who still delays this process and says that abhi jaldi kya hai, and he starts this process at the age of 50, where he's got just 10 years, 120 months to attain that goal, and the money is, as I mentioned, compounding and growing at a CAGR of 12%, which is a modest expectation. That amount is going to become 2,15,203 per month. And here it has increased by 15 times because of delay of 20 years. So this indicates one thing. What is the mantra? Simple two words: start early. You cannot procrastinate. Your savings need to get translated to your investments, and you need to start the process as early as possible. Now, myths on investment terms, and this is an entertaining part. हम लोग इसको हर रोज सुनते हैं, हर रोज देखते रहते हैं. So let's see what are those myths on investment terms. Risk versus return. How do people talk about returns? They never understand the risk behind it, and they just talk all over the place. Now, I'm just quoting one myth, one example. Okay. So many people invest in debt funds or in fixed income. Okay. And they expect aggressive returns. So if a fixed deposit is giving, say, for example, 6% or 7%, or a corporate deposit is giving 7% or 7.5%, and you tell the person, or a debt fund is giving 7 to 7.5%, and you tell the person that I've got this product, whichever product, a structured product in fixed income, and this bank, which is a small bank, is giving 9% returns, and this debt fund, which is a credit risk fund, which is giving 9.5 to 10%, and this corporate deposit is, which is just say an A rated deposit, not a triple A, is giving around 10%. You will be attracted towards it. And from a fixed income space, where stability and liquidity are more important, and returns are always to be considered in a bound range. You expect aggressive returns. You know what's it like? It's basically, Anup Jalota, the Bhajan King, the Ghazal singer. It's like expecting Anup Jalota to sing like Badshah, who's a rap singer. So see the expectations which we have. If you expect Anup Jalota, who's a mild singer, to sing like Badshah, God bless. Okay. Oh, that's my favorite entry in movies. That's Ajay Devgan's debut movie, and many of you will be knowing about it. Way back in the early 90s, I was a big fan. And he is making this grand entry on two bikes. And I'm calling it asset allocation. Let's see how. Okay. So, according to some people who are this type of flamboyant, grand entry type and, all dashing and action oriented, अगर उनको बोलो ना कि conservative asset allocation क्या होता है, because they don't know what is the regulated way and how to do, and tell them to take a lesser risk, they will say that divide the money I have, I divide my money equally, which I invest between cryptocurrency and day trading in penny stocks. I leave it to your judgment, friends, whatever you all know about cryptocurrencies and speculative trading, or jugaad, which people do in penny stocks and, keep speculating and losing money. This is not asset allocation. Okay, we'll talk about it in a later way, but this is how people perceive कि मैंने पैसे दो अलग अलग चीजों में डाले हैं, but what is the underlying security? What is the risk? What are you planning to do with your money? How much risk can you take? Now, this is the true picture of uh, diversification from asset allocation. Now, many people here, looking at the first photo on the left, is that this is a complete, eggs ka recipes. So people who eat eggs will relate to it. To the vegetarians, थोड़ी देर के लिए मुझे माफ करना, friends. But this is an example to quote that from an egg you are making scrambled, you are making fried, you are making poached, and you are making boiled eggs. Egg ही है. Okay, and the diversification is in the same asset class. I'll explain to you. Whereas the complete breakfast is across asset classes. So you have a toast, you can see baked beans, you can see hash brown potatoes, you can see mushrooms, you can see egg, and you can see vegetables. Okay. Now, egg is one component there. Now, I'll explain to you why the myth and the fact. Now, when you say I invest I do diversification, and my diversification in equity is I spread across mutual funds, equity-based mutual funds. I spread across direct equity. I buy unlisted shares. Boss, you're still in the family of equity. The risk element, the underlying security is still equity. So that is diversification. Yes, the parameters of risk are different, but the risk has not been eliminated. But when you do asset allocation, what are you doing? That you're putting your money in various asset classes like fixed income, bonds. In fixed income, you have debt funds, you have bonds, you have government savings schemes, you have fixed deposits. You put your money into gold, which is gold ETF, physical gold, or gold mutual funds. You put your money into equity based mutual funds, into stocks. All these things do not have a direct correlation with each other. That is asset allocation. So this is clearing the myth from the facts. Okay. This is again a very important behavioral aspect, friends, that people want to get into every perceivable financial product. So be it in mutual funds, they want to get into every NFO which is launched. Be it stocks, they want to invest in every IPO. They want to get into HNIs, want to get into structured products, everything what the bank offers. Traders want to do derivatives. Real estate wants to do many other things, buy plots and everything. The point is the financial world today has become a complex concrete jungle. Okay. My perception is that the lesser I understand complex financial products, I'm far better and stronger I get in explaining simple financial products to my clients. So the products which are, having a proper regulation to it, the products which are having a track record to it, the products which have a proper underlying security, the products which are understood by me first as a financial, veteran, or I would not say veteran, but I'm still learning in 1 hour. Those products I can explain to my clients because we have seen through track history, okay, that whatever you do, if you are able to generate a CAGR of 12 to 15% in your investment, I would say timeline or a duration of 25, 30 years, that's mentioned by Warren Buffett. It's not me who's quoting this. I think you've done a pretty reasonable job. So no need to take those, complex products and undue risks. So I believe in this policy of KISS. Okay, a KISS is always great gesture, but this is keeping it simple and straight. Please understand that in finance, if you are not getting into complex products, if you understand the parameter of every definition of every product, select the ones which you are comfortable, which give you stability, which give you growth, and which give you easy liquidity. Please invest in those products. And most importantly, which are regulated. One more problem where people are missold products. Okay, and I follow this. I've taken some of these slides from the uh, on social media. I'm quite active. I keep posting on LinkedIn and everywhere. Some of them which for this audience I brought it. When you are facing clients, you will do your best. But when clients keep demanding, or HNIs, this is more prevalent in HNIs, kuch naya dikhao. I'm bored of mutual funds, I'm bored of stocks. Okay. When they say kuch naya dikhao, or what's new which you can offer me, okay, these three words that probably are the root cause of mis-selling happening in financial products, because here you're actually enticing, or here you're encouraging or boosting the product manufacturers to get into producing or manufacturing more complex products, which I believe that over a period of time just fizzle out, and the tried and tested stable financial products which are there just hold their own and deliver it for you. uh, this sentence, friends, I've heard many people saying, and you would have also said, if you are a advisor, many people would have asked you, your relatives would have told you, your friends would have told you, and I take quite offense to it. I'll tell you why. And it's a myth. Okay, people should be told on their point blank and on their face. Is people ask you, market में पैसे कहाँ लगाने? So when prospective clients ask me, market में पैसे कहाँ लगाने हैं, I humbly correct them that boss, यहाँ पैसे निवेश किए जाते हैं, लगाए नहीं. We do not gamble. लगाते नहीं हम पैसे, हम पैसों को इन्वेस्ट करते हैं, निवेश करते हैं, which is basically please respect money. Now, what are the beliefs which people have? Myths and beliefs are like, a thin line between them. And people, you will come across various people having various risk parameters. It's your job to, dissect them. You will find that many young people do not want to, get into equity. They are investing in fixed deposits as a beginning. Okay. And senior citizens, on the contrary, are you know as it is, they are a little bit free right now in life, and their responsibilities are not there, and they keep reading, they are knowledgeable, and if they have a good surplus, nothing wrong, but they show a channelization towards investing in equity. So you would always put the other way around, right? You should invest in equity and senior citizens in fixed deposits. Hota hai, but you will find exceptions there also. Death by debt, it's a synonym. It sounds very similar. And people think that whatever is the solution to reaching your goals, ये planning वैनिंग सब गई side पे. Borrowing money or taking loans is the only solution for reaching your goals. Believe me, they become slaves for the rest of their life. Every rupee they earn today is to repay their future. So again, a notion, a belief should be done away with. Plan and then achieve your goal only as a measure. If for some reason your planning doesn't work out well, keep a loan as the last option, not as the first. And all this, friends, also has got a deep root in a family's financial culture. Okay. And how your family has thought, how your family thinks about finance, how your family thinks about money, how your family thinks about products has a big bearing on your upbringing and having a bias towards a certain product. So in your family, you have got always to hear that real estate acha hai. You will grow up with that mindset. You will not open up your mind and thought process to दूसरा कुछ भी अच्छा हो सकता है. Or somebody would say that I only buy gold. They have always been buying gold for every Tom, Dick, and Harry occasion. Or somebody is just doing fixed deposits. So the point is that your behavior gets influenced by how your family has been there, doing it at their own time. They were doing it in a certain period or stage of their life. You should be looking at it in a neutral way. Today, we are in a very, very fortunate atmosphere where there are so many options for us. So do not create a bias, but think and act. And this, I think, is one of the simple ones which not many people would, differentiate, but there is a difference. Okay. Where does money come from? And you say, I made a lot of money. The money comes, boss, from your profession, from what you do, from what you, have a job as. What is your business? Okay. And from that, you make money, अपने खर्चे चलाते हो उससे. But boss, wealth comes from investments. So you will always find a wealthy man who's done investments. He's made a lot of money, is good to say, but he's created a lot of wealth is actually what makes him wealthy. So again, there is a difference. And finally, uh, my definition of financial well-being is this simple definition, friends, and I hope it's useful for you all. Financial well-being is a process in which you have accepted your financial mistakes, are now constantly financially aware of your present scenario, and have taken the right financial actions to fulfill your goals. So this is my version of financial planning, that many people in the first point have an ego that they made a mistake and do not want to come out of it. Boss, don't do that. Accept it. Then after you've accepted, accept your present situation. Be aware of where you are and work towards taking the right financial actions to move forward and achieve your goals. And always have an internal financial manifesto. अंदर अपने दिल में एक financial manifesto बना के रखो कि मुझे ये करना है, ये नहीं करना है. This is right for me. These are my targets. This is what I'll follow, and this is what is going to be good for me. So, friends, with that, I end my presentation. I'm open for questions, and I hope that this has been beneficial to you. And thank you very much. Anyone who wants to reach out, my details are put here. And I give it to Sahil to take it forward.
Sir, there is one question that one is asking why penny stocks are good for investment in long term.
Sorry, I didn't get it.
Why penny stocks are good for investments in long term?
I never said that. I think penny stocks are never good for investments in the long term. Please stick to the, if you want to have a long term portfolio in stocks, please stick to the large caps because those are stable. And if you wish to have an exposure to the small cap or the penny stocks, or not stocks, but small cap thing, then mutual fund is the right way where you should invest in small cap mutual funds, but don't try taking a call on your own and directly invest in penny stocks. That's not the right way to create wealth for the long term.
So Abhishek is asking that is it good to invest in NPS for retirement or should he invest the same amount in mutual funds?
No, so NPS and mutual fund both are good, Abhishek. And NPS also is a brilliant vehicle. They are managed in a very efficient way. So NPS, only thing is in the NPS, the exposure is not that much as mutual funds give a different type of offering to you. But NPS, if you're doing, I would suggest that do NPS, but also do mutual funds along with it.
So Tamanna is asking that systematic investment planning is suitable for students.
Absolutely, Tamanna. I think students nowadays, this investor education webinar by NISM is good, but lots of colleges are now taking up, financial planning course, and it's always better to start early. And I've given that example of 30, 40, and 50. So awareness of mutual fund investing, awareness of SIP. Starting now, we have mutual fund SIPs which are as low as 100 rupees and 250 rupees and 500 rupees. I think parents should take that initiative, should make boys and girls understand that the earlier they start, it is better for them. And putting aside this amount of 500 rupees per month, I think will do a world of good for the people in the future.
So there is one question that please advise a few of the best and most reliable source sites to use and the best way to shortlist high potential stocks today for tomorrow.
Uh, as per my constraint, I'm sorry, but being a SEBI registered advisor, I'm not allowed to name portals or stocks or mutual funds on a platform, please.
So Diksha is asking that what options shall be used by students for first investment or at their early start age.
Okay, great question. So for students, I think if you want to inculcate that the habit of uh, investing regularly, you could do two things. Say for example, you can spare 1,000 rupees. 500 they can put in a bank RD, a recurring deposit. Okay. That is your fixed income space. And that is every month you are putting in an RD. Okay. I'm just giving a base example. Amounts you please decide. Okay. Similarly, a 500 rupees SIP in mutual funds, say for example, to start off with in a hybrid type of a mutual fund, which is a mix of equity and debt, you could start an SIP there as well. Okay. So, two regular investments will inculcate the habit of saving and the amount going one in a safe avenue, but going regularly, and one in a little bit of a high risk thing, but hybrid. Again, not pure equity, because in that there could be fluctuations, volatility in the mutual fund. But just for the student to understand how the investment is growing in both and do it for a little bit of a longer time frame, say 3 years to start off with, just to get an idea of uh, the returns in which in the RD will be fixed, but here they'll be fluctuating. So the person will understand how the products work.
So there is one question that apart from mutual fund and stock, where some of the part of saving should be invested, means in government scheme like FD, National Savings Scheme, Sukanya Samriddhi Scheme, Yojana, and etc.
So ideally, I would put it, for people who are salaried, uh, EPF is the best, the Employee Provident Fund, which gets deducted from the person's salary. Brilliant way to, have a fixed income source. And I think at more than 8%, 8.15 over 8.2% per annum. That's a brilliant way to keep investing till your, retirement period. So EPF for people who are salaried, PPF, that's a public provident fund for people who do not have an EPF. Again, 7.1% tax free, which is there. You can all have that exposure there, because even today, some very, very few products are there which are tax free, and PPF remains that exempt type of a product which is there. So you can look at that. Obviously, Sukanya Samriddhi scheme for the girl child. has to be a very important component, secure, government guaranteed, and for the long term. Uh, because then I don't want to get into the the post office products which are there, because they also come with a lock-in thing. And for senior citizens, surely people can look at the senior citizen savings scheme. It is even today giving a 8.2% quarterly interest for a 5-year period for senior citizens, and the cap on it is 30 lakh rupees per individual. You can invest. So if you have a senior citizens as a couple, they have the capacity to invest 60 lakh rupees if their finances permit for a period of 5 years in the senior citizen savings scheme of the government. But this is for senior citizens.
Sir, Rabindranath is asking that what kind of asset mix and proportion should be for person approaching retirement in 5 years, covering monthly cash flows and growth.
So there cannot be a thumb rule for that, Ravinder Kumar. But a rough estimate which I can give approaching retirement is that 5 years before you are there. So say for example your age is 55 and you are approaching retirement at 60. I would suggest that around 60% of your 60 to 65% of your money that time should have been in equity based mutual funds or stocks or something, and the remaining 40% should have been in fixed income or debt. But surely as you approach your retirement goal, I think you should start looking at you know slowly gradually moving out of equity by around 10 to 15% and shifting it towards your debt component. But again, I said this is not a set rule, to each his own. In financial planning, I need to take a complete 360 degrees holistic view of the situation of the person and then advise. So that is on a professional basis. But could be the thumb rule that I don't want people to go completely conservative today, considering inflation is high. When they retire, you should have equity component when you retire, but to what proportion depends on your situation as well. But keep money liquid. Don't keep it more under lock-in type of things, because in retirement, liquidity is of paramount importance. Don't take high-risk products.
Hello, sir. Rahul
Yeah.
is asking that is bond NCD good for investment?
Bond NCD, I think the only point in bond NCD is which rating are you taking it, how much risk element in that, what is the credit rating of that bond or that NCD. That is one risk associated with it. But if you want to take an exposure to corporate bonds and these fixed income instruments, I would suggest going for a debt fund. You can go in for a corporate bond fund, which has more than 80% triple A rated as a compulsion, so you won't get it wrong. And it is directly proportional to the RBI, interest rate regime, and you're guaranteed of at least some good paper being in it. Returns are fluctuating, being a debt fund, but that again cannot be completely off it. So in fixed income, when we prepare a fixed income portfolio, it has to be a mix of everything. You need to have liquidity in terms of fixed deposits, some money kept in savings account, some in debt funds, some in government schemes like PPF, EPF, and a mix of everything. But liquidity and your credit rating is very important. As I mentioned, that aggressive returns from debt funds, please don't go into it, because there's always a high element of risk attached to it.
Sir, one last question that which is the best for investing in real estate or stock market?
Real estate for me, this is a very personal opinion. Real estate for me is not for investing, it's for the house in which you stay in. So you get a good house to stay in, which is keeps you and your family happy. You are satisfied with the house. Don't go into heavy borrowing to get that into a new house. Do it in an affordable manner, but to stay in the house. For investing, again, stock market is not the only avenue. You need to do asset allocation, and that is where your money will be, I think, more liquid, more growth oriented, and more importantly, more transparent. and you will get your money when you want, because it is a any other financial instrument is more liquid to come out of it or to get money. So when you want it at the time of achieving your goal. So real estate for me is having a good house of your own or renting it, whatever suits you. But as far as investment goes, it should be in financial instruments.
Sir, can we wind up the session?
Yeah, please. I'm okay with it. I'll just
Yeah.
type my message here.
Yeah, yeah. Thank you so much, sir. I
I
would
hope it
like
was
to,
useful for everyone.
as it was useful actually, I would like to extend our heartfelt thanks for taking the time to speak at our webinar. Your insight, expertise, and engaging presentation made a lasting impact on our audience. Thank you once again for sharing your time and knowledge with us. Thank you, sir. Wishing you a good
Thank you
day.
very much and a pleasure doing this.